Hey, what's up, stock compounders? Brad here. So last week I made a video about getting a library account at the Fairfax County Public Library for $27 a year in order to get access to both ValueLine and Morningstar. And it worked. Today I got my new library account. So once you do this, if you're going to do this as well, they'll email you your library account number. And then you go into this research center at the Fairfax Library website, click on Research Databases, click on V, and then you can go to Value Line. And then all you need to do here is enter your library account number. So here we are in Value Line. Now, the big reason I wanted to explore ValueLine was to try to simulate the acquirer's multiple, which is a book that I summarized recently on the YouTube channel here. And essentially, the acquirer's multiple is enterprise value divided by the last 12 months of operating earnings. Unfortunately, ValueLine doesn't seem to have a specific number for enterprise value. That's not one of the selectable metrics. So, I'd probably have to do a little bit of combining several different factors here if I wanted to come up with a figure for enterprise value from this ValueLine data. But people like Monish Pabrai and others talk about using ValueLine to occasionally look at a list of low price to earnings ratio companies. So that's what I did. So really my goal was create a list of these low PE companies and then look them up one at a time in Morningstar in order to input both the enterprise value and the last 12 months of operating earnings. So that's kind of what I did for 30 companies, the top 30 here in the low price to earnings ratio. So, this is what I searched for. Price to earnings of 0 to 5. I don't know why it just jumps to 408, but it's actually doing 0 to 5 right now. Market cap above 40 million. Because I don't want the company to be too small. Looking for, Magic Formula uses 50 million and higher. So, I'm just using 40 here. And then I thought this was an interesting metric, percent insider holdings. That's one of the metrics I use to filter down my Magic Formula stock results to go from the top 50 down to 5 that I'm buying every 3 months. So I thought that one was an interesting one to include. So here I've got this list. I just copied it over to a spreadsheet. And then I looked up the enterprise value and operating income for the last 12 months in Morningstar. And I simply divided enterprise value by operating income to get this acquirer's multiple. So you see here I sorted by the acquirer's multiple. Now, a lot of these have a negative operating income from the last 12 months. So I'm going to ignore these guys. So starting here. And then the last thing I did was I looked to see if there was a Value Investors Club write-up in the last couple of years. There was not for these first two. So I'm going to take a pass on those. This one's biotech. Not very familiar with mining stocks, so I'm going to pass on those two. AMCX and GTX came up in the third and fourth positions. Now, I actually own GTX as one of my Magic Formula stocks. So at the end of June, one of my 5 stock buys for the Magic Formula portfolio was GTX. So, decent acquirer's multiple right there at 5.3. If you look at the free version of the acquirer's multiple, which gives the results for the top, I think it's the biggest 1,000 U.S. companies or U.S. stocks, the list tends to start around 5, an acquirer's multiple around 5. So this is a very good acquirer's multiple. Now, AMCX is another one that shows up frequently in the magic formula. And that also had an attractive acquirer's multiple. I think the reason I didn't buy AMCX at the end of June was it didn't have a very high insider holdings percentage. Let's see if we can find that here. AMCX, where are you? Am I just missing it? AMCX, oh, it does have a high, 23.64% insider holdings. So the issue there may have been it didn't have a recent Value Investors Club write-up, or it wasn't owned by a super investor, although I think that one is owned by a number of super investors. So anyway, none of these guys had VIC write-ups. Fly and Mesa did. Obviously, this is an interesting space right now, the airline industry, based on what's happening with travel. Not super compelling acquirers multiples, I think, because operating income has really taken a hit in the last 6 months. I think that's why we're not seeing higher numbers for the acquirers multiple there. But both of these, Fly and Mesa, the prices for those are significantly below where the prices were with the recent Value Investors Club write-ups. So those could be interesting. But yeah, I just wanted to go through this exercise of screening for low PE stocks in ValueLine, and then trying to figure out how well does that translate to low acquirers multiples. And it doesn't translate very well. You can see here there's only really a handful of low PE stocks that have an intriguing acquirers multiple from my perspective. Anything less than 8 or even less than 10. I mean, there's only nine companies here that have acquirers multiple less than 10 that are one of the lowest price to earnings stocks. So, I'm a little disappointed that it's not easier to use ValueLine or Morningstar to generate this list of acquirers multiple stocks. In the end, it might just be easier to sign up for Tobias Carlisle's stock screener service for $50 a month, rather than jumping through all the hoops of trying to simulate that screen. But it was an interesting exercise nonetheless. And another thing in ValueLine that might be worth exploring that I noticed, what's going on here? I guess I got to go back through this. Is so one of the reports they put out every month, special situations, I thought that was interesting. So every month they create an issue where they talk about special situations. And Joel Greenblatt's book, How to Be a Stock Market Genius, is really focused on these special situation stocks. So if you click on this, you can look at the monthly report, and they have a couple recommendations. They have different companies that they talk about in this special situations monthly report. So that could be one to dive into if you're looking for smaller stocks that might be mispriced. That piqued my interest. And of course, you've got the screener that's very valuable. So definitely worth the $27 a year for this service. I'm not exactly sure yet how I want to leverage it based on what I'm doing now, largely with cloning super investors and the magic formula. I think I might incorporate some aspect of the acquirer's multiple into my kind of quarterly magic formula stock picks. But you know, it's a powerful service. I can tell it's a powerful service. I'm just a little disappointed that it's not giving me exactly what I'm looking for right off the bat here. But so I just wanted to give you guys an update on my Fairfax library membership, and how I'm using it to explore great stocks that measure up well in the acquirer's multiple screen. So that is all I've got for you today, guys. Let me know, if you've signed up for that membership. I'm sure there have been a number of subscriptions in the last week or so since I made a video about it. And I'm curious to hear from you. What are you excited to utilize in this value line, and with also the Morningstar premium subscription? What are you excited? How are you excited to use these powerful services? Let me know. Maybe you'll tip me off on some kind of aspect of these services that I'm not even aware of. I would appreciate any information you guys can share. All right, guys. With that, I will see you in the next video. Take care.